So good morning, everyone, and welcome to our webinar, New Zakat Regulation in KSA. Let me first introduce ourselves. My name is Hani Nagar. I'm Associate Tax Partner for Middle East and GCC in Druva. I have also with me Fatima. Fatima is Tax Manager for GCC, Ankit, Assistant Tax Manager for GCC, and Abdulaziz, Assistant Manager for KSA. So before we start to go into deep discussion on this webinar, maybe you already know that in Saudi, or some of us or all of us knows that in Saudi they have a unique tax system. It's a mix between tax system and zakat system. Tax, it's on foreign shareholder, foreign companies, or we can say for non-GCC or non-Saudi shareholder or companies, and the tax rate is 20%. For Zakat, Zakat is subject for Saudis and GCC citizen and residents with 2.5%. Each system is different from the calculation perspective, the mechanism, the process, and today we will cover the new Zakat regulation which released recently in Saudi. And we preferred in our webinar today not just to present what is the new Zakat regulation says or covered, but we did it in a question mode. So we highlighted the main or important question can be raised by any taxpayer or zakat payer in Saudi, and we will answer these questions. Of course, in one webinar for 45 minutes or 1 hour, we will never cover the treatment or the whole new zakat regulation. But again, as I said, we will try to cover at least the main important topic that you will looking for or we need to hear answer about them. Okay, so let's start quickly as a background on the new zakat regulation in KSA. So please, Fatima, yeah. So there is in March 2024, there is a new zakat regulation released by Zatka, and it's not only amendment of some provision or article on the older zakat regulation, but it's a totally new one. And we will take you through the main aspect, like I mentioned. However, because sometimes in the market or the taxpayer, zakat payer, they are asking this question, okay, uh, what is the amendment or what is the changes? It's not amendment of regulation or the provision, but it's totally different from the old one. So if you as a company or as a cabinet in Saudi, if you would be subject to the new zakat regulation or the old one, again, we will answer this question. My advice to you only to do something like an internal or even the external analysis to see what is the impact for you as a business between new zakat regulation and old one. So please, Fatima, move. The main criteria or the main pillar that the new Zakat regulation covered. So they covered now the Zakat residency, and they also bringing or they highlight or they covered in details the provision and liabilities. Of course, this includes shareholder loans. And by the way, well, I forgot to mention also that for the new Zakat regulation, mainly they covered the main issue from the practice happened in previous years from the old Zakat regulation, and especially from shareholder loan, provision, opening balance, ending balance. They also introduced new deductibilities, including raw material, governmental receivable. Zakat calculation now it's in the line with the financial statement, closing balance. If you recall also, and if you worked in Saudi before, or if you have a company in Saudi before, there is always confusion between opening balance and ending balance for some of the accounts. Now in the new Zakat regulation, they are following or it's the calculation now in line with the financial statement, which reduce this kind of issues from practice issues we are facing as a taxpayer or zakat payer, and from Zatka as well, to reduce the litigation cases they have. Liability calculation also introduced how to calculate, and also introduced assessment and limit updates for the zakat base. So now going to some of main, please Fatima, yeah, please move. So let's go now for First question you can raise, what is the effective date of the new regulation? So I will ask this question to Ankit, please, if you can share your view also on the effective date. And what do you think, Ankit, also from the effective date? Should if the Zakat payer have an open tax audit, or he didn't receive a tax notice, he can follow the new Zakat regulation, or it's a must to follow the old one based on the years? Yeah, Ankit, please.
Yeah, thanks, Honey. So hi everyone, I'm Ankit. So I'll start off by saying that the regulation is started off from the fiscal year of Jan 2024, but a DACA payer can opt to apply these rules to the prior fiscal year of 2023. But that is only if they submit a request within 60 days from the date of the bylaws being introduced. And that date is March 22nd of 2024. So to be honest, from our suggestion, we'd basically suggest you to carry out, like Hanny said, some sort of simulation exercise. So to understand which regulation, either the new one or the old one, the Zakat base is the lowest. And obviously, if it's lower, you seek more tax benefits. So in terms of the actual calculations of the tax of the Zakat base, we'll cover that further in the webinar today. But yeah,
Thank you,
that's the
Ankit.
current
Thank you.
effective date. Yeah.
Yeah, thanks, Ankit. So just to elaborate more on what Ankit raised now or highlighted, that now if you received now a tax audit or Zakat audit in our case, notice from Zatka, you have the right to ask Zatka to audit you based on the new Zakat regulation. However, there is a condition here. You must file an application within 60 days from receiving the audit notice. And again, I keep emphasizing not to take this approach or position before you do an assessment first. Because if you ask Zatka to audit you based on the new Zakat regulation, and you found it you end up by paying higher Zakat liability, you will not be able to withdraw and say, okay, I'm sorry, I need to work on the old one. Uh, Another question also, Ankit, what are the parameters laid down regarding the tax residency here of a natural person?
Yeah, sure. So I I think it's important to actually understand what a natural person actually is. So a natural person is kind of any living person, regardless of their age, who might be considered a taxable person in KSA. So a natural person is deemed as a resident in KSA if the following applies. So if they have a permanent residence in the kingdom and they've been physically present in the kingdom for more than 30 days, or if they haven't got a permanent residence in the kingdom, but the person's been present in KSA for more than 183 days in the Zakat year, then that person will be deemed a resident in the kingdom. But for a legal person, so what is a legal person? A legal person is kind of a resident person for the purpose of tax in KSA. So a legal person is deemed to be a resident in KSA if one of the following applies. So firstly, their principal headquarters is in the kingdom, or secondly, that said person is incorporated under the laws of the kingdom. So I think next what's important to highlight is what kind of is a principal headquarters. So a principal headquarter is one of the following. So firstly, if the usual meeting of the board of directors is regularly held in the kingdom and any management of the establishment of the business is carried out there, or the establishment's business generates majority of their revenue in the kingdom, then that person would also be classified as their principal headquarters.
Amazing, and very, very interesting, Ankit. Ankit, there is also, I think, there is a very important question that anyone can raise it. Uh, on which financial statement value should the calculation be done under the new Zakat regulation, of course?
Yeah, sure, Hani. So as we discussed earlier, the now in the new Zakat regulations, the financial statement it should be valued at the financial statements at the end of the Zakat year. And also the fair value in the financial statements should be used for calculating Zakat at the end of the year. So for example, if a person has a year end of 31st August 2024, then at that date is where the Zakat is calculated.
Okay, yeah. I mean, and this, of course, very different from previous Zakat regulation, but again, we need to
Exactly.
focus more on the new one now.
Yeah.
and see how it will impact your business as a zakat payer.
Yeah.
Let me also raise a question. So a very basic one, but very important as well. And this will be to Abdulaziz, if you allow to me, Abdulaziz, please. So what is the concept here in the new zakat regulation of minimum and maximum zakat base?
Yeah, Mr. Hani. Assalamu alaikum, everyone.
Alaikum salam wa barakatuh.
Uh, actually, the and the previous regulation, there was no minimum and low limit for zakah limitation. Zatka was used, which one is higher from zakah base or the adjusted net profit. But now in the new regulation, we have minimum limit and we have maximum limit. And when can we use the minimum or the maximum limit? The minimum limit, actually, we can use it. It will be subject only when the adjusted net profit it's higher than the zakah base. And how? Let's say, for example, if the company lose in financial years and the base is negative, how they can? How they will pay zakah? Actually, they will not pay zakah for this. However,
Yeah.
if the result is positive, then yeah, they will be subject to zakah. Um, but the time limit, yani to make it briefly, the time limit
Mm.
it's actually a comparison between the difference between the adjusted net profit and the net book and the non-deducted assets, and the minimum is will be the lower amount. Yeah,
Yeah, okay.
this is the minimum
Very,
zakah
very,
base.
very clear, Abdulaziz. Very clear, Abdulaziz. Thank you. So I
Yeah.
think also in connection to the same, there is how to reach or to work or to calculate the zakah base based on the new zakah regulation. I believe it will give the audience or the participant more light on the concept of minimum and maximum one. So Fatima, from reading and our practice with a client in Saudi. So, in summary or a simple way, how is the zakah base calculated under the new zakah regulation?
Sure, Annie. So moving on to the computational aspects of how the zakat base will be calculated under the new zakat regulations. So the formula is prescribed in the law only. The zakat base is equal to difference between the book net profit and adjusted net profit, equity and the likes, non-current liabilities, and out of this we'll subtract the deductions. And each part of the formula, there is a separate list which is there in the new zakat regulations as to what should be considered. This is slightly different than the old formula which was prescribed in the earlier zakat regulations. In that, the difference between the net book profit and the adjusted net profit was not mentioned. Instead, we would add the book net profit and the adjusted net profit both to the zakat base, and automatically the difference would be calculated and adjusted in the zakat base. But now the computational mechanism is very specific. Only the difference needs to be adjusted in the zakat base. So this is a formula which is there, and later on we'll be diving deep into each part of the formula.
Yeah, okay. So, another question also to you, Fatima, please. So, how will book profit or losses considered in the computation of the zakah on the new zakah regulation?
Sure, Hani. The book profit and loss will be adjusted with certain items which are mentioned in the zakat regulations. So there is no negative list of items as to what should be excluded from the zakat base, but definitely what expenses should be considered in the calculation of the book profit, that is prescribed. So basically, the expenses should be actual in nature. They should be related to the business activity. They should be supported by adequate documentation. If these conditions are not satisfied, then the expenses will be added back to the book profit, and thereby creating a difference between the book profit and the amended net profit. So that is how we will derive the amended net profit. Um And as I mentioned earlier, the adjustments will be calculated separately. It will not be that the book profit will be a starting point and then we'll add all the adjustments and then derive an amended net profit. The adjustments will be calculated separately, and those will be added or subtracted from the zakat base.
So it's not easy, Fatima, as I can say.
Yeah,
Okay, so Fatima, we know always we have financial statement or financial books, and
yeah,
sometimes we do some adjustment in
correct.
tax, which
Yeah,
also applicable here in zakah. So we
yes,
can do some adjustment to reach to the zakah base, right? I
yes.
know, in the zakah regulations there is many adjustment, but you can highlight the main one.
Sure, sure, Hani. Uh, so I will be now speaking about what are the major changes to the adjustments to the accounting net profit in the new Zakat regulations vis-a-vis the old Zakat regulations. So the old Zakat regulations had certain prescribed items which clarify that these items cannot be basically considered in the calculation of the net profit. But now there is a different treatment which is prescribed in the new Zakat regulations. So I'll be speaking about that now. So first, going on to deductible expenses. In the earlier Zakat regulations, whatever provisions were debited to the profit and loss account, that is the provisions which were created during the year or the provisions which were reversed during the year, that were disregarded for the computation of the net profit under the Zakat regulations. But now those provisions will be considered as an allowable expense. Uh, in the earlier Zakat regulations, the zakat and income corporate tax paid was a disallowable expense, but now it's a deductible expense under the new zakat regulations. And one more interesting point is that in the earlier zakat regulations, there was a very specific mention in the regulations that any capital expenses will not be allowed. But there is no mention of that in the new zakat regulations. So this will be very interesting to see how the authorities will now consider capital expenses to be a deductible expense under the new zakat regulations, because typically capital expenses are disallowed even in normal corporate tax computation, and they're always basically eligible for depreciation, or they are never allowed as an expense. Um, Moving on to the next item, which is bad debts write-off. In the earlier zakat regulations, to substantiate that a bad debt is actually written off, and it is there is no wrongful disclosure on part of on part of the zakat payer. There was a requirement of a CPA certificate. A CPA certificate means a certificate which is basically issued by the local chartered accountant, certifying that these bad debts are actually written off. But now in the new Zakat regulations, they have given a relief for this, that if the bad debt is less than or equal to 1% of the revenue, then there is no requirement of the certificate. Also, if the bad debt is rising out of a debtor who is in the bankruptcy process, then also this bad debt will be considered as true and will be allowed as a deduction to calculate the net profit. Moving on to the next item, which is importation differences. Earlier, the Zakat regulations had a very specific provision that the difference between the import price as per the Zakat payer and what is declared in the customs declaration will be treated as an addition to the net profit. Basically, they want to make sure that what is disclosed in the customs document and what is being disclosed by the Zakat payer is matching. But now there is no such specific provisions in the new Zakat regulations. So it will be very interesting to again see how the authorities will treat this in the new Zakat regulations, and whether they can automatically scrutinize this and make such addition to the accounting net profit, despite being no specific provision there in the new Zakat regulations.
Yeah, I mean, it's very interesting, Fatima. Yeah. So from our expectation, always from Zakah or Zatka, on
Hmm.
practice, they will do whatever they want
Yes,
to make
exactly.
sure that there is no tax or Zakah leakage.
Yes, yes.
I believe also from this importation, it's a very interesting point and one of the main and major point for dispute with Zatka. But
Hmm.
I believe also it will continue because Zatkas, you need to know, understand. Now you are importing higher than you recorded. So what is the
Hmm.
reason? And
Hmm.
there is another provision on the zakah and the tax and even the proposed tax law and the tax procedures law that zakah have the full right to examine
Hmm.
and inspect whatever account
Yes.
and documents they need. So maybe they can use this provision to cover
Hmm.
this gap here in the zakah
Hmm. Hmm.
regulation. Fatima, also you mentioned something on the Zakah calculation about equity, one of the items, right?
Yes, yes.
So maybe you can clarify more what should be considered as equity here.
Okay, sure, Hani. So equity, how we understand in the accounting world, that is equity plus retained profits. That is obviously will be considered as equity under the new Zakat regulations as well. But apart from that, the new Zakat regulations also clarify certain additional items which would be considered as same as equity and will be added to the Zakat base. So the list which is presented, firstly, the profits, the retained profits, as I mentioned. So there are three types of profits. That is, first is authorized profits for distribution, second is distributed profits, and third is realized or unrealized profits. So first is authorized profits for distribution. That is a normal retained profits of the business, which are available to the shareholders as a dividend, which is not yet distributed but available to the shareholders as a dividend. That will be considered as a equity and added to the zakat base. Then distributed profits. Distributed profits would mean dividend or any sort of profit distribution. Typically, they will not be added to the zakat base because they have already been added earlier in the first category, which is authorized profits for distribution. But if the authorities find out that this dividend was used as a mechanism intentionally for reducing the zakat base, meaning that it is not added to the zakat base, then they have the powers under the new regulations to consider this as an ad hoc addition to the zakat base also. Then moving on to realized unrealized profits. So realized profits would mean the normal actual realized profits from a sale of asset, for example, and unrealized profits would mean a notional gain which is realized at the end of the year because of revaluation. Both these items will be considered as an equity and added to the zakat base. Moving on to provisions. All sorts of provisions are considered as equity and added to the zakat base, excluding provisions related to employee-related balances, which is end of service benefits, vacation provisions, etc. They will not be considered as equity, but they will be considered as non-current liabilities, which we'll talk about later. Shareholder credit loans in one-person company and sole proprietorship. This will be considered as an equity. We'll also talk about this later when we're talking about non-current liabilities. Carry forward losses, treasury stocks, reduce equity. They will have a negative effect on equity. So whatever losses are there in the financial statements, if they are in, they will be reducing the equity. How profits will be adding the equity, losses will be reducing the equity. And these treasury stocks, which are there for employee stock options, they will reduce equity, but the conditions attached to that is that it should be approved by in the extraordinary general assembly of the company, and they must align with the local regulation, that is Ministry of Human Resources regulations in KSA.
Amazing, amazing, Fatima. Thank you. So, Fatima, as we spoke about equity
Hmm.
and what is items should be considered as equity, we can
Yeah,
also clarify to the participant for non-current liabilities. What should be under
yeah,
non-current liabilities under the new Zakah regulation?
sure, Hani. So, uh, under the new Zakat regulations, what will be considered as a non-current liability and added to the Zakat base? Basically, it means non-current liabilities which are disclosed in your balance sheet, in your financial statements, the closing balance of which will be considered as an addition to the Zakat base. Then provisions. In the earlier slide, I spoke about provisions for employee-related benefits. That will be considered as a non-current liability, not as an equity, as a non-current liability and added to the zakat base. Then deferred tax liability, contract liability, which are normal liabilities which are disclosed in the financial statements. They will be added to the zakat base. And shareholder credit loans in partnership and capital companies. If the shareholder credit loan is in one-person company and sole proprietorship, they will be considered as equity. But if it is in a partnership and capital company, then they will be disclosed as a liability. So this is a difference in treatment of shareholder credit loans in the
Yeah,
new
yeah.
yeah.
Yeah, I agree. I agree. We started our webinar saying that for the new Zakah regulations, they introduced some different deduction definition, right?
Yes.
So I am as a Zakah payer now, which I believe
Hmm.
also participant
Hmm.
will raise this question. I am
Hmm.
preparing my annual Zakah return or
Hmm.
declaration.
Hmm.
So what items should I consider as a deductions from my Zakah base?
Sure. So this is very important to understand the deductions from the zakat base, because as a tax authority, if the taxpayer wants to add something to the zakat base and pay zakat on that, the tax authorities will not refrain from saying, okay, don't add this to the zakat base. But once you make a deduction from the zakat base, that is when the tax authorities will scrutinize this in more detail. So it is very important to understand what are the items deductible from the zakat base, and there are also underlying conditions attached to each and every item. So first, starting off with investments. So investments in establishments inside KSA and outside KSA, they can be considered as a deduction from the zakat base. Then investment in mutual funds, investment in non-governmental deeds and bonds, which are treated as a capital by the issuer. Basically, the issuer company is not treating this deeds and bonds as a loan in their financial statements, but rather as an equity. They will be considered, the person who's investing in that will be eligible to deduct this from the zakat base. Net fixed assets and equivalents, intangible asset held for non-trading purposes, materials not intended for sale and raw materials, statutory deposits in compliance with relevant laws, deferred tax asset, shareholder debit loans, and delayed governmental dues. So these are a broad list of items which would be considered as a deduction from the zakat base. As I mentioned, there are conditions attached to most of the items, and there is one important provision in the law that there is no set off allowed between the liabilities and assets. So if I have a shareholder debit loan and a shareholder credit loan, I cannot set them off and basically disclose a net balance in the zakat based calculation. I have to treat them separately, as a separate conditions attached to both. um, and one more very interesting provision is that, in the addition to the zakat base, the zakat regulations speak about that non-current liabilities which are disclosed in your balance sheet, that can be added to the zakat base. So non-current liabilities typically would mean not only shareholder loans but also loans from other third parties. So that will be added added to the zakat base. But when we come to the deduction side, the new Zakat regulations specifically state that except shareholder debit loans, other debit loans and equivalents will not be deducted from the Zakat base. So basically, Zatka is saying that, okay, you add everything, but when you're going to subtract, you can only subtract shareholder debit loans and not other loans. So
Yeah.
this is very interesting, interesting provision. And this
I,
needs to be kept in mind when we are calculating the Zakat base under the new regulations.
yeah. I thought tax is more complicated from Zakah, but it seems Zakah now is more complicated, huh?
Yes.
So, Fatima, for these items which you mentioned,
Hmm.
I
Hmm.
understand also there is some condition to
Yes.
claim as a deductibility, right? So,
Yes.
can you also highlight what are these condition, please?
Sure. So moving on to the deductibility, again, continuing the same discussion, and now the conditions, very important to understand. So for non-current assets, there is a general condition which is attached, that it should be used in the business operations. It should be recognized in the financial statements of the zakat payer. And the zakat regulations are giving a sort of a relief that if it is not registered also in the zakat payer's name, they can be deducted if it is recognized in the financial statements, if its revenue and expenses are recognized in the financial statements, and they're used in the taxpayers, zakat payers activity. So, for example, if I have to give an example of of an asset which I've taken on lease, which is not yet registered in my name, but I'm using it in my business, I'm going to recognize the corresponding revenue and expenses in my financial statements. That is rent expense I'm going to recognize, so I can deduct this as an asset from my zakat base. Shareholder debit loans. Uh, this is very important. There are a host of conditions which are attached over here. Firstly, that shareholder debit loans are not deductible if it is granted to companies which are listed in the capital market. Then, if it is not deductible if the debtor is not subject to zakat. So these two conditions are clearly stating that in these two scenarios, shareholder debit loans will not be allowed as a deduction. The third is that it shall be deductible if it is granted to non-listed companies and some conditions are satisfied. That is, firstly, that the debtor prepares the financial statements, the payment period and the return, that is the interest, is clearly identified in the contract, and the interest or the return on the loan is consistent with the market price. And and the lender is not fully owned by one entity. In these scenarios, the shareholders' debit loans can be deducted, provided all these conditions are satisfied. Then moving on to investments in companies. Investments in companies can be deducted from the zakat base only if they are held for a non-trading purpose and they are disclosed as non-current assets in the financial statements. So if the company regularly trades in investments and its intention is to make profit out of these out of these sales, then they will be considered as a trading investment, and accordingly they will not be allowed as a deduction. And the establishment must be zakat registered in the kingdom. That if the investment is made in a KSA company, the KSA company should be registered in KSA as a zakat payer. And for investments which are outside of KSA, that is foreign investments, zakat should be paid on these investments in compliance with the minimum zakat base, and this should be certified by a CA again. So for foreign investments, they're very particular. For investments within KSA, there's a straightforward condition that it should be in a zakat registered. It should be in a company which is zakat registered. But for foreign investments, the zakat has to be paid in accordance with minimum zakat base calculation, and this also should be certified by a CA.
Yeah.
For delayed government dues, these can be deducted from the zakat base only if these government dues or government deposits are if it is deposited in accordance with in compliance with the applicable laws, and if the delay is attributable to the government entity, only then can I deduct this from my zakat base. And also I should have appropriate documentation available with me to substantiate before the zakat that actually this government due is on account of the statutory authority making a delayed payment to me, and hence I've disclosed this as my asset in my balance sheet and accordingly deducting it. And if it is classified as a current asset, then it can be deducted from the zakat base, provided the corresponding current liability is added to the zakat base. We'll be talking about this in much detail at a later stage. That is how current assets and current liability should be treated in the new zakat regulations.
Yeah, interesting, Fatima. So take away from here that there is some certain condition now under the new Zakah regulation. So we as a Zakah payer or a company in Saudi will file our tax return or are preparing our tax return. We need to make sure that these conditions are met. Other
Yes.
rather than because if in the future later if the Zakah is already asked for Zakah audit and they found one of these conditions not met, they simply disallow such a deductibility or deduction and add it back to your zakah base again.
Yes. Yes.
By the way, this detailed condition which highlighted now for under the new zakah regulation, we saw that the Zakat is trying to minimize the dispute and challenging from zakah payer against them when they perform the audit. So they listed down all of the conditions to be followed from day one. No need to go and discuss. You should have this. You should have this when you have audit itself. So again, please make sure that all of these conditions are met and you have a proper documentation in place to be provided to that calculator when they ask for Zakah audit. Another question, maybe Fatima or Abdulaziz also can share his insight about it. So there is a current
Yeah.
liability and current asset in the new Zakah regulation, right?
Yeah.
So what share your view of this, how it will be treated under the new Zakah regulation?
Yeah, actually, Hani, current liability as per the new regulation should not be added to the base, except only if the current assets deducted, and this will be on a portion basis, not always.
Mm.
And if a deducted current assets, we must see how much percentage this item represent from the total current assets, and
Ah,
then
okay.
yeah, and
Please,
then
please,
we add, yeah, it's, it's clear.
please continue as there is a delay on the, please continue.
Yeah, yeah. And then we represent from the total current assets and we add its percentage to the current liability. So it's
Okay.
new things in
Yeah. And new and in simple. I think this one is simple, so it's a clear more for other than aspects were introduced in the Zakat regulation. In relation to the same Abdulaziz also, if you please allow me to ask you this question. So what is the overall cap provided on the new Zakat regulation for addition of this liability?
Yeah, this actually is not changed from the old regulation. The non-current liability and then the total addition, let's say, the total addition to the base shall not be exceeded the deduction from the base. I think this is
Ah,
clear and we
so
already have it in the old.
yeah, so the cap here, it's overall cap, it's for total of non-current liability and current liability, of course, at the cap
Yes,
shouldn't or shall not be exceeded the total deduction. So if I have a deduction with 100,000 and I have 200,000 for current liability and non-current liability, I should only use the 100. Should it be
use the
more?
100, yes.
Exactly. Right.
Yes, yes, exactly.
Okay, perfect. Very, very clear this point also, Abdulaziz. So for non-current liability, how it will be considered in the Zakah base if certain non-current assets are not eligible to be deducted?
Yeah. Actually, we should add all the non-current liability to the base. But if we discover there is non-current liability not being added to the base, so the current asset that if there is non-current assets that taxpayer has not deducted, we must see how much same as يعني we treat it same as the current liability. We must see how much percentage this item
Mm.
represent from the non-current assets and exclude it from the liability that must be added to the base.
No, okay, okay, clear, Abdulaziz. Abdulaziz, there is a concept of losses carried forward in the Zakah, new Zakah regulation.
Yes, it's
So,
actually treated as per the it's same as equity and the new regulation. So we take the end of the period for the carry forward losses.
okay,
So
so
it's
the
indeed
Zakah payer
treated
has
as
the right
equity.
to claim the Zakah losses, right? If he have
Yes,
a
yes,
Zakah losses,
yes.
he can claim it, right?
They will claim it by end of the period. So
Mm.
the new regulation is become very clear on this also.
Okay, okay, amazing, amazing. Thank you, Abdulaziz. Very, very interesting. Uh,
Thank you.
Ankit, maybe you can take this question also. So,
Yeah.
will the duration of the ownership or a change on the legal status of the Zakah payer? So,
Yeah.
can
So yeah. So
determine applicability? Hmm.
yeah, so I'll try and keep this answer short and sweet, but we've had quite a lot of questions about this in terms of change of ownership. So actually,
Yeah.
what happens is in this Zakat regulation, the change of ownership in the year has no impact on the regulations. So essentially, the ownership at the end of the end of the financial year end is the point at which the Zakat is determined at. So, for example, if there's any change of ownership in the year, that's not relevant. Whatever the ownership status stands at year end is what the zakat is formed on. But obviously, if there's any non-Saudi or non-GCC ownership, then it has to be apportioned based on that.
Oh, interesting. We always, or we recently also hear about transfer pricing in Saudi, right? So it's already there for taxpayer since 2000, even before 2000 even. And recently they introduced for Zakah payer as well. And so Fatima, from the new Zakah regulation or the new changes in Saudi, so what is the applicability of transfer pricing now to the Zakah payer?
Yes, Hani. So this is a very interesting development and a very critical development as well. Earlier, transfer pricing was not applicable to zakat payers. They were exempt from that applicability, but now it's become mandatory for zakat payers. The Zatka is would be implementing this applicability of transfer pricing in phases. It's from 1st of January 24 till financial year 26. The TP regulations apply to all zakat payers, excluding investment funds. And post financial year 27, which is phase two, it applies to all the zakat payers, including investment funds. And it will be very necessary to evaluate what are the compliances which are enlisted in the transfer pricing regulations of for the under the new Zakat regulations. So first is disclosure form and affidavit. This is similar to a transfer pricing disclosure form which we have in other countries, and an affidavit meaning that this should be it should be certified by a local auditor, local CA, that these transactions are at arm's length. And this is a mandatory requirement which needs to be submitted to ZATCA, irrespective of any revenue threshold. Moving on to master file and local file. Over here, there are thresholds which are prescribed. So if the revenue is less than or equal to Saudi Riyal 48 million, the master file and local file compliance is not applicable. If it is more than Saudi Riyal 48 million, then in phase one, which is applicable to all zakat payers, excluding investment funds, it is voluntary, and it is mandatory in phase two. So this requirement has to be met mandatorily after 1st of Jan 27. And if it is Saudi Riyal more than 100 million, then it is mandatory. Basically, there is no option, but we have to maintain this master file and local file. And all zakat payers need to comply with this. From the submission standpoint, the disclosure form and affidavit, it needs to be submitted to ZATCA within 120 days of the fiscal year end. Local file and master file does need to be submitted by a by the zakat payer itself, but it is required to be submitted only if it is requested by the ZATCA. Only the maintenance is mandatory, but the submission depends if ZATCA requests it. And CBC report and notification. This is applicable for multinational groups which are having presence in several jurisdictions, and where the revenue, the aggregate group revenue, is exceeding Saudi Riyal 3.2 billion, then they need to comply with the CBC report and the CBC notification. And this also needs to be submitted to ZATCA.
Yeah. Fatima, if you ask me, this is a major and a very important change in the Zakah regime
Yes.
in Saudi for transfer pricing. Because introducing transfer pricing on the Zakah payer, it's a big dramatic change. The Zakah payer now he need to maintain a proper documentation. He need to work on arm's length principle. He need to check his related party transactions. He have to maintain local file and if needed of requested master file. The DB disclosure form, it's only not just a form to be filled and submitted. Zatka will use this form later on the tax audit or Zaka audit to check Zaka payer records and books and see if it's matching with this disclosure form or no. So, and it's not an easy task because we as a tax professional or tax head or even CFOs, anyone who's responsible for this function in his company, he knows transfer pricing is not an easy task and it's a big homework need to be maintained, need to be followed, and he should be prepared because from our practice experience also with Zatka in past years, the biggest disputed item or the main focus tax audit areas they are doing on transfer pricing. And you can imagine in one hour meeting or 1 hour tax audit from Zatka based on the transfer pricing, he can raise or he can send a demand claim with 1 million, 2 million, 3 million. He can spend 1 month reviewing your expenses and he can end up only with 100,000, 200,000 different only. So it's very, very easy to them to audit and very easy to them to bring an addition Zakah liability. So
Yes.
please, for all Zakah payer, make sure or please focus more on the transfer pricing area, please. Uh, Thank you, Fatima. Abdulaziz, so maybe also we can raise this question or the audience can raise this question. What are the Zakah obligation for entity involved in a merger? If there a merger happened, what's the Zakah obligation here?
يعني uh, it's
So for
actually
for merger only now. You are in mute, Abdulaziz, sorry. Hello?
Yeah. Actually, you can, Fatima, go back up. There is one more slide before
Yeah,
we
business
come to
thesis
the
or merger
merger.
is fine. You can cover both, Abdulaziz, please. So let's
Yeah.
go for merger. Sorry, let's go first for cease of activity and then merger.
Yeah.
Go back, Fatima, for the previous slide. Hello,
Yes,
Fatima?
Hani, this
Okay,
is
for
for
preliminary
yeah,
cessation,
cessation, yes.
Okay, yeah, please, Abdulaziz, your view, please, on this one.
yeah. If the activity is cessation for the company, then you have to notify Zatka that the activity is stopped within 60 days. So they will not be subject to Zakat after the 60 days and when it's closed. And suspension also, Zakat will be applied only in the ongoing activity. So if it is activity also stop, so there is no Zakat. Let's say for liquidation, Zakat says once liquidation start, you have to notify Zakat before the liquidation starts. So when the year that will be liquidated, so you have to notify Zakat that next year the company will be liquidated. So the authority will know that the activity will stop also.
Okay, good, Abdul. And for the merger, Abdulaziz, also, please. So what will be the, yeah.
Okay.
Hello?
Yeah.
Abdulaziz,
Uh,
for the merger, please, for this one.
Zakat due to financial past and Hijri or Georgian years. If it's a new entity and can you just give me
Yeah, it's
uh,
for the merger, it's easy. So for the new entity from the merger, so the CAD due it will be on the physical year end, based on the Georgian year or Georgian year, okay? And for if there is an entity be acquired, so the calculation will be on the acquiring entity physical years, starting from the last Zakat declaration, of course. And also there is assuming that if the Zakat payer when he prepared or after he prepared his Zakat return and he found some errors. So what will be the action here, Ankit, please?
Yeah, sure. So I'll start off by saying this is actually a really vital point to understand because obviously any company can make an error, right? So
Yeah.
I think we'll start off by saying that the company has the option to amend their return from the authority, and then post this, if the authority was to accept this, then the entity will have 30 days to actually revise that return. And then, but one point to note is that if the entity was to miss that deadline of 30 days, then the Zakat payer must then reapply for the amendment. And also one point to note is that the submission must be completed through the authority's system, which is done online on their website.
Yeah. So now yeah, for the Zakat payer that if there is an error found, there is a process need to be taken. So
Exactly.
it's not like that there is error happened, so I can wait till the Zakat audit will come and then I can discuss with auditor and fix it. It will not be like this, right?
No,
Oh,
no. It
amazing.
has to be done within 30 days, yeah.
And of course, from the system perspective, from that portal perspective, you will not be able to do any changes and before that approved, right?
No, no.
No. So it's not like before that you can log in and do file an amended return or amended account. No, you need to notify Zatka, and maybe Zatka they can refuse, maybe in
Yeah,
practice. So in this case, I will not be able to do any correction in my return, right?
yeah. So you have to wait for them to respond first, yeah.
Okay, very clear, very clear. Thank you, thank you. And Fatima, what is this deemed basis Zakat payer now on the Zakat calculation? There is a deemed base concept, right? You are in mute, Fatima.
Sorry, I was in mute. So yes, this is very interesting to evaluate. Some entities may not qualify to be a zakat payer, but they're still obligated to pay zakat. So in which situation can Zakat allege that you have to pay zakat on your financial statement values? Basically, if the financial statements are not available, or if they are delayed, and Zatka at a later stage finds out that actually zakat was due on your financial statement values based on some external records, they can they can make a deem based calculation and ask the taxpayer to pay zakat, so that the zakat base aligns with the financial statement values. And how the calculation will be done is based on your sales. Your sales is a very driving factor on how this deem based calculation will be done. So there is a prescribed formula which is there in the zakat regulations, that is sales divided by 8 plus sales into 15%. This is the formula which is prescribed in the zakat new zakat regulations. These sales must match the VAT declaration, the sales disclosed in a VAT declaration, and also as well as a REIT declaration. If the sales value is
Read,
less than
read
the
declaration,
capital.
Fatima. Read declaration
Mm,
is real estate tax return in Saudi.
yes, correct.
Mm.
If the result of this formula, which is sales divided by 8 plus sales into 15%, is less than the capital which is provided in the business records, basically your net worth of the business, then the capital will be considered as a zakat base. uh, if the tax deemed based zakat payer does not have registered sales in VAT, then also Zatka has a way of calculating, has has prescribed basically a formula in the zakat regulations as how the zakat base will be calculated. It will be calculated as higher of the following: annual average number of active employees, which is reported to general insurance regulations in Saudi, into Saudi Riyal 6,000. Value of imports according to custom declarations into 115%, value of purchases according to VAT declaration into 115%, or the total sales, point of sales, export data, data of the civil contracts. So basically, Zatka has a wide range of information which they can basically get the data from, and then calculate your zakat base. As per what has been prescribed in the zakat regulations. But as Hani mentioned, uh, typically Zatka always has adopted an aggressive approach, and it will be very interesting to see how this deem-based calculation also will be done in the zakat regulations, and whether they actually follow what is prescribed in the law. And further, zakat base will be 2.5%, or the zakat will be 2.5% of the zakat base, and a minimum of Saudi Riyal 500 will need to be paid. And the assessment will be done on the tin number of the zakat payer. So basically, this formula, the intention of this formula is to ensure that whatever zakat the taxpayer is paying to Zatka is aligned with their volume of sales or their net worth of the business, so that there is no disconnect between that.
Yeah, yeah. Thank you, Fatima. We keep there is a very hot topic currently in Saudi, which are HQ, regional headquarter. And from
Yes.
that already released guidelines before for the tax and exemption, tax incentives,
Yes.
and all of this discussion. And I know that RHQ will need a dedicated full 2 or 3 days workshop, not even webinar. But under the new Zakat regulation, did you see anything or any rules related to RHQ?
Sure. So, just for the benefit of the audience, just to give a small recap of what RHQ rules entail, they're basically the regulations incentivize MNCs to establish their regional headquarters in KSA, and if they engage, if a particular set of conditions are attached, that they have to employ senior people in the organization, and they have to engage in eligible activities. Then, subject to satisfaction of these conditions, they can enjoy 0% corporate tax rate and withholding on income derived from eligible activities. Uh, but very interesting, in the RHQ rules, it is mentioned 0% exempt, 0% rate applicable on 0% income tax applicable on eligible activities. So this income tax which is mentioned, does it include zakat also? That is open to discussion basically. And typically income tax and zakat are two separate concepts. Zakat is sort of a charitable levy which is levied on GCC nationals, and income tax is basically in a form of a tax which you pay to the authorities. So income tax typically will not include zakat. Both are separate concepts, as I mentioned. So based on the current guidance which is available, even though there may be a GCC-based entity having GCC shareholders setting up their headquarters in KSA, and they would be subject to zakat, but they will not be able to enjoy any RHQ benefit under the regulations. But still, there are discussions ongoing with Zatka, because this will create a mismatch in the treatment between a foreign-based RHQ setup vis-a-vis a GCC-based RHQ setup, and hence to avoid this discrimination, there are still discussions ongoing with Zatka, and we expect a positive outcome, but time will tell.
Yeah, exactly, Fatima. And also for audience, also interesting, because when Zatka released this RHQ incentive, the main intention for to bring or attract the foreign companies to move their RHQ or to establish RHQ inside KSA. But it seems that they didn't consider that there is some of the companies, they already are GCC citizen or residents, they can also move their RHQs. And there is now a discussion, as Fatima mentioned, discussion with Zatka if it can be covered or not. And they are referring to the tax incentive, not zakat. But from commercial and business perspective, there is a zakat payer should be entitled as well to such incentive. But let's
Yes.
see what will be the final decision from Zatka on this aspect. But it's a very interesting discussion are now currently now ongoing with Zatka. I believe we already almost there, our time already finished, but quickly, Ankit, please. So let's close this webinar for a compliance requirement as per the new Zakat regulation. What will be the main compliance requirement now?
Yeah, so maybe Abdulaziz, you can take the first take.
Yes, okay. Actually, there's a car filing. As we already know, and as per the old regulation, we have 4 months after the year end. We have 120 days till end of April. Yeah, and the audit, that can go back within 5 years to make an audit for the company. Uh, and they must notify the client that before 30 days that they will issue the assessment or the queries. So they will go with him and ask for the queries and assessment. Yes.
Yeah, sure, thanks. So yeah, so as you mentioned, Abdulaziz, so basically a tax audit, when it's requested by the authorities, we need to make sure that they give you 30 days notice prior to commencement. So basically, and after that, the payer also has 30 days to respond to those queries. But one thing to highlight is if the Zakat payer does not respond to the audit request in time, then obviously penalties may arise. But those penalties obviously can depend on the nature and the severity of the non-compliance. And also typically they correspond to the value of the Zakat liability in question. So also, in terms of the tax appeals process, if a Zakat payer wanted to make an appeal with the tax authorities, then the first step would be to submit a formal request to the Zakat authority. And this has to be done within 30 days from the date of receiving the notice. But then if the tax authorities were to reply and the payer is still unsatisfied with the outcome that they've said, then it can be escalated and a second appeal can be filed. But that second appeal must be filed within 30 days of the initial decision to the admin court. But one thing to please note, guys, is that the final decision is final and binding, and it can't be changed after that.
Yeah, okay. So now we have 30 days in appeal and notifying that can notifying
Exactly.
the payer. So 30 days, it's a magic number now. So we should
Yeah.
always keep in our minds is 30 days now. Is a
Yeah.
deadline of notifying or replying or whatever. right?
Yeah.
So, and of course, just to add for the 120 days, this is in relation to original tax return, okay? But if there is a correction or changes happen, we covered before that we need to notify Zatka, but you must file your original Zakat return first. So don't
Yes.
mix. So the caber shouldn't mix between both of them. That yeah, there is a correction. I need to do it. So I will wait till Zatka responds. No, you need to file first. Then you need to get the
Then you,
Zatka review or view.
yes.
So yeah, I believe we already reached to our time, and I think we covered most of the main questions. We for sure we will do another many webinars covering for each webinar will cover specific points in details. But I hope that we give the audience or the participant overview on the new Zakat regulation now, and especially why we choose this time now, because as a Zakat payer or the client or the companies, they are closing their financial year this month as of December. So before closing their financial year, maybe they should be aware, or our advice to be aware, what will be the Zakat liability for 2024 for them. And even if they have open years for previous years, what will be the Zakat liability as well, or expected Zakat liability if they have a tax audit from Zatka. In case he will be audited under the new Zakat regulation, or he will be audited under the old Zakat regulation. So he can, or the tax or the Zakat payer or the company, he can prepare himself, he can budget for the cost, and also he have an overview what will be the tax return result in the liability for the Zakat for 2024. Unfortunately, we received some of the question we'll not be able to cover because the audience start to drop off because the time already passed. But we will answer separately by email for the participant or the audience who raised these questions. And we are happy also to receive any other questions from participant or audience anytime. If you have any question about the new Zakat regulation or any other topic he interested about it. So thanks all. Thanks for the audience participants. Thanks for Abdulaziz, Ankit, Fatima for your insight and feedback. And best of luck on the new Zakat regulation filings this year. And hope we will not see many issues from Zatka on the implementation side. Thank you all. Bye bye. Assalamu
Thank you very
alaikum.
much, guys.
Thank you,
Thank you.
Cheers.
everyone.
Bye.
Thank you, everyone.
Thank you, everyone. Bye.